Hello guys, still Prophet here. Now, I quickly want to make a video on liquidity sweep. Okay, this is actually quite very important. The thought just came to my mind earlier today. I said, okay, let me make this video on liquidity sweep. Though I dropped a lot of video already on this same topic. All right, last week I dropped a video on structure and liquidity. Okay, in that particular video, I explained liquidity sweep, but I really wanted to make it as a single video for those that might not understand it very well. For those that probably, if you're quite probably wondering why am I so consistent on this liquidity sweep, let me give you a quick recap of something that might happen if you don't understand liquidity sweep. I believe some of you might have entered a trade and then market stopped you at, and it just stopped you out and they started moving in your direction. Understand? Like you have, I believe some of us here have experienced the event so many times that your entire trade market stops you out and then started moving your entire direction. Probably the place where you enter the trade might be a known level of support that you want to start buying from, but all of a sudden the market spiked down, drop below that level of support, stop you out of the trade and start moving upward. Understand? All those things are just concept of liquidity. Understand? Everything in the market happens for a reason, and it is liquidity. Understand? And this liquidity of a thing, it happens for just one reason, and that is to earn stop losses of most retail traders. Understand? So institutional traders, they target the places where these retail traders put in their stop. Understand? And that is where they target our stop ons before moving in, before the trend starts going in certain direction. Okay, let's proceed, because this will be very, very important. I'll explain a lot of chart illustration for you guys. In the last video I gave you guys a few days ago, I explained an order block. And I want to use this concept here as well. So please pay attention very carefully. Listen, if the market is in an uptrend, we have something like this. Okay, and then you saw an order block here in this at a zone somewhere here at a zone. All right, remember when we explained order block, we said I list all the concepts of what another block is made up for you. All right, now having a break of structure here means this order block is valid. I explained everything in that video. Just go and watch it in case you missed it. In video I explained on another block. It's just above. You can go and watch it. All right, now this is a known level of support. When the market, if there is a known order block here, is a support zone. Understand? Because another block is a level of demand. Understand? Demand or supply. There are levels on the chart here. Institutions execute their buy or sell orders. Understand? So those are known level of support or demand. So in a situation like this where the market have a spike upward, and then this candle, there's a candle here that there's a valid order block candle here, which is your level of demand. Understand? Probably a lot of people will start buying, like a lot of people will start placing their buy orders here to start buying. Understand? But at some point the market will come. Sometimes the market will come. It will not start moving from here immediately. Instead, what it does is it will come below this. It will break below this low for it to start moving. Understand? So this concept you're seeing here is called liquidity sweep, right? It happens when the market intentionally, I've explained this thing so many times. Let's take note of this. It happens when the market intentionally, take note of that, intentionally move below a known level of support or move above a known level of resistance. And the purpose is to hunt stop losses, mostly of retail traders. Do you understand? So the purpose, as you can see, like I explained, when we start, I explained something that, sometimes you enter a trade, for example, you enter a buy, and market goes below that level, stop you, and first start going upside. Those are liquidities. Market is trying to earn stop losses of the traders. Do you understand? So in a situation like this, as you can see here, when the market intentionally, this level is a valid demand zone. Note, always remember that is a valid demand zone. Not that it's not, but it's a valid demand zone. The market intentionally moved below it. Why did the market do that? Is to earn stop loss. And when such a thing happens, that point is a liquidity sweep. So I'm explaining this video so that you understand what liquidity sweep is. And if you want to take a trade, in the video I gave to you guys on structure and liquidity, in that video I explained the concept to look out for when trading structures and liquidity. I said, first of all, know your overall trend of the market. All right. I said, know your overall trend of the market. Number one. All right. Number two, look for a liquidity sweep. All right. Liquidity sweep. That is what we're just explaining now. And number three, when you have a liquidity sweep, and there is a first break of structure, look out for your transactional liquidity. I explained everything that you can go and watch it. Now, the reason I'm making this video again, there are some persons that don't really understand the liquidity sweep, so they send some what do I call this? Charts that okay, there's a liquidity sweep, but those are not actually liquidity sweep. Now there's a trade that the reason I missed that trade was I didn't set limits. I was so angry with that trade, and the trade is one of my someone I learned from also posted the trade. I believe most of you will know him. I learned some SMC from him. I'm going to look at the trade for you guys. I missed the trade not because the trade was not good, it was good, but when it got to entry, he immediately picked with that notification, so I missed the trade. And this is the trade. I think I still have the chart. All right, this is the trade. Anyways, let me not use the trade that I missed. Let's use the trade that I took in our community. We took this trade on I think Telegram. Now this is the GBP USD. Let's use a fresh chart. I don't want to erase this because I'm still in the trade. Let's not erase this. Let's use a fresh chart. GBP USD. All right. Now look at on the 4 hours time frame. First of all, this is the interesting part. Listen. Look at what happened here. Look at what liquidity sweep concept is strictly even all about here. Look at what happened here. Please pay attention. This is an uptrend. Like naturally, market is going up an uptrend here. Let's look at what happened here. Pay attention to this. This was before this break of structure. Before this break of structure, the valid break of structure, the candle that pushed the market to break the structure is this last bearish candle here. Look at the bearish candle. This 4 hours bearish candle was what pushed the price down, like was what pushed the price up to create this high. That created this high here. All right, this is a valid order block. This candle here, this last bearish candle before this impulsive move, and as you can see, it has all the parameters of an order block. Sweep the previous candle low. As you can see, it has a valid imbalance or a fair value gap, so it's a valid order block. So a lot of people will start buying. Of course, we start buying. Yeah, as you can see, the market started moving, but it just not moving very well, consolidating, and then there was a spike down. As you can see, a spike that took the low out. Look at it. This was a spike that took out the low. As you can see, the market swept that low. This thing that happened here is where liquidity sweep is. Understand? This is called liquidity sweep. Okay, this is a valid liquidity sweep. Now, naturally, I took a buy, and my first target is here, and my second target is here. Understand? I'm holding the buy. I took partials here at this point. Then I'll take my last take profit at that end. Do you understand? So that is the buy. Now, This is one of the reasons I took the trade, because market swept liquidity on the 4 hours demand zone, which is a valid buy. And then also I went to the 30 minutes time frame or 15 minutes time frame. There was also a good setup as well. Let's go to the 15 minutes time frame and see what we have. Now on the 15 minutes time frame, look at what happened. Recall, let's keep our drawings. Okay, let's go to the 30 minutes time frame. Okay, are you seeing a liquidity sweep here? This was a liquidity sweep here. Do you understand? Like a valid and sweet liquidity sweep. This was it. Okay, now the reason I took the buy on the 15 minutes time frame, I took this as a liquidity sweep as well on the 15 minutes time frame or 30 minutes time frame. But I knew that all this spike that happened here that I indicated here is a liquidity sweep. So I took this as a liquidity sweep as well on the what is it called? On the 30 minutes time frame. Do you understand? And then look at what happened. This candle here was the last bearish candle before the market broke structure here. So that is this again is a valid demand zone on the 30 minutes time frame. Do you understand? Very valid demand zone. The market pushed to this high, as you can see. Now what happened next? After the market pushed to this, I came back exactly to that demand zone. You understand? Now I use this as my structural liquidity. For those that understand what I mean, you should understand. If you have been watching my video, you should understand. All right, the low that is closer to our POI, the internal low, I took this as my structural liquidity or engineered liquidity. For those that use that word, I use structural liquidity. Okay, these are my structural liquidity, and then I entered the buy exactly here. I shared this trade, like I shared it live on Telegram, and this is my strong low. You can check my Telegram, you'll see the trade there live. Okay, so as you can see, it's the same concept over and over again. On the 4 hours time frame, we had the same concept, we had the same structure. Then we went to the 15 minutes time frame to look for a quick buy. We had the same structure as well. Do you understand? So please, I want to always know this. Okay, so understand what liquidity sweep a liquidity sweep is, so I don't make mistake. Let me make a quick review of our trade setup or our trade strategy again. First of all, what you look out for one is your overall trend of the market. So know what the market is doing on the higher time frame. You understand? After knowing that, if you know what the market is doing, if the market is going up or coming down or consolidating, you have known what to do. The next thing you look out for is one, look out for what? A liquidity what? A liquidity sweep. And that is what we just explained now. When market intentionally move below a new level of support or resistance, please take note of that. I explained it in the beginning, I'm doing it again. If there is an uptrend and then there's another block which is a demand zone, there's another block here which is a demand zone after the break of structure. Now when the market comes back and breaks below that other block and have another break of structure, always make sure add another break of structure. This thing that happened here is a liquidity sweep. No matter what it is, whether probably is a wick or with candles, is a liquidity sweep. So always take note of that. In as much as already a second break of structure here after the liquidity sweep, this break of structure here is a transactional liquidity. And after transactional liquidity, like we explained, transactional liquidities are used for correction. So after this first break of structure, which happens after liquidity sweep, expect a what? A correction. Understand? This correction is what gives our structural liquidity. We might have a second break here, it's not necessary. Understand? The market is not necessary, but if you see it, no problem. Then this other block, you can use another block here as your entry, or this other block that was broken. Please take note of this. This other block that was broken here, you know, this other block that was broken, that here we had a liquidity sweep. This other block here, you can use it as your entry. and it's now called a breaker block. You can use it as your entry, now known as what? A breaker block, as your what? As your entry for buy when the market returns to that zone. This is actually a sweet concept if you understand it thoroughly. So I've been trying my best to make sure that I explain this thing very, very, very thoroughly. Understand what a valid liquidity sweep is. You don't just see where I see some persons doing this. You see the market, like, I don't even know how to say it. Like, you just see some small sweep, you just say no. Please, before you say there's a liquidity sweep in the market, always make sure that place the market sweep is a known level of demand or a known level of resistance. Okay, you don't just see a place, just identify, okay, this is a liquidity sweep. No, make sure that place where the market sweep is either a zone of demand or a support, or it was a resistance zone or supply zone where the market sweep. Do you understand? So take note of that. Don't just identify it. You don't just see a place where the market is something like this. Then you say, okay, I'm just an illustration. Before you can identify somewhere that is a liquidity sweep, make sure that place was a known level of support or a known level of resistance. Now, how do you know a known level of support or resistance? So I've already explained other blocks. Other blocks, there are places on the chart or levels on the chart where there are large buying or selling orders by institutions. Those are known level of support or resistance. And we already explained what another block is. So it shouldn't be identifying a liquidity sweep shouldn't be a problem. In as much you understand what another block is, how to identify another block, and where the market moves above or below a known level of another block. Do you understand now? I think that is it. I believe that explains my curiosity rather, because I've been seeing a lot of charts that are quite very funny. That's why I say, okay, I need to make this so that you guys can understand this concept even more and more better. So I think that is it. If you have any question, please share it in the comment section. And as you know, I trade SMC Smart Money, and I will always be sharing informations on general SMC Smart Money concept. So always make sure that you like, subscribe, and turn on your notification bell. So when I release any content on Smart Money, you get notified. And most importantly, following Q2, which is the second quarter of the year, I'm currently taking some students under me that wants to learn Smart Money under me. So in case you're interested, go to Telegram. The link will be in the description. Go to Telegram, join. You see here to send me a direct message, and then you can ask for the information. All right, guys. I'll see you guys in our next video content. Stay on Smart Money. Bless up, guys. Wait. Search.